Welcome back. We're continuing our coverage of the 29th Annual Goldman Sachs Retail Conference. Our Brian Sozzi is back, and now with a look at the athletic sector. Brian.
Thanks so much, Rossell. Appreciate it. Yeah, joining me now are the co-CEOs of On. We have Marc, good to see you, and Martin Hoffmann, good to see you guys. No stranger to our programming. I guess in the spirit of Apple releases, you're going to tell us you're going to launch the Cloud 20, right?
Yes, we have a big surprise for you today, but we can't unveil it yet. So
Fair enough. Okay, you have to ask a tough question. So the conference is well underway. You had a CEO dinner. You're talking to a lot of executives. What are you hearing from them? What's been the feedback?
I mean, there's a lot of discussion around consumer demand. How does it unfold in the US? How does it unfold in Europe? There's a lot of talk around our growth. So we had 103% in the quarter in the US, 67% globally. So very strong growth. So how are we looking at making that a sustainable growth rate? So that's been a big discussion. And then the third part is clearly the whole topic around sustainability. We're going to launch tomorrow a new platform, our own reuse program called Onwards. So that's our new iPhone, exactly. So we're looking forward to that.
Take us through that platform. What is it about? What does it stand for? And what does the rollout look like?
Basically, it plays into our goal to become a circular company. So what we can do with it is that consumers can send back their used product, and they then will resell it for them. And we can also use some of the used product that we have in our warehouse and resell it at the lower price. So this is really kind of a second usage platform.
Does that put you in competition with an Allbirds?
No, absolutely not.
Interesting.
Yeah, we're in our own category.
Okay. Martin, let's go over to you here. Talk us through about what you're seeing in terms of demand. I mean, we're coming up against the holiday shopping season. You're placing orders right now. What are you guys seeing?
Yeah, that's another big topic, understanding where we see the consumer demand. From all the conversations that we have with our retail partners for this year, but also for next year, they all see a continued very strong demand, so no slowdown. There's a strong confidence also that the running category will be resilient. It's the cheapest way of doing sport. And this is how we plan also the year to go and then also going into next year.
What do you attribute the strength in your brand? Growing at these rates have not been the norm. We've been following you since the IPO. Every quarter seems to be better than the last one. What do you attribute it to?
I think we brought a lot of very innovative product to the market in the running category, in the trail running category, but also a lot of product that speak to sustainability and to design. And then really the partnership with some of the biggest retailers that helps us a lot in expanding and talking to the right customers, in expanding our customer base, also to a younger customer. And we do this on a global base. So we have growth in China, we have growth in Europe, and really a strong growth in North America.
How's the demand looking like in China at the moment?
Exactly. This is complicated for co-CEOs. No, I think that the demand in China is very, very strong. Unfortunately, we can't really capitalize on it fully because of the COVID lockdowns that we're seeing. So it's a bit hard to predict. But the consumer demand and how the product resonates with the consumer is very, very positive.
Is there any normality that has come back to the supply chain?
Yeah, I think the supply chain is way more normal than it used to be. The biggest issue right now, we've got two major issues. One, there's very little visibility on the freight. So this is a global problem. So usually for approximately 80% of the freight where it actually is. It's a global supplier. We're currently at roughly 40%, which makes warehousing, inbound tracking, and so on complicated. And then, if you grow at 103% in the US, that's a lot of growth to move in a warehouse. So to be able to bring all these products out on time is a big challenge for us.
So an investor or an analyst comes up to you at this conference, guys, how do you make this growth sustainable? Well, how are you doing that?
I mean, this is all about kind of very targeted channel expansion and making sure we're doing that in a long-term, durable way. So rather than kind of adding a new retailer with 100 doors in the first year, we want to do that over a couple of years, and we want to make sure we bring the right product at the right time to the right consumer. So we can build a long-term growth platform.
Talk to us a little bit about the culture inside of your company. I was realizing before this interview, I've never talked to you one-on-one. You're both together, which is cool. I mean, it's not something you see too often in corporate America. You guys seem to get along great buddies. I mean, how does the culture inside of your company different relative to the companies you compete with?
Well, it's super important for us to build a culture of a high-performing team, the culture of a sports team. So we like to play together. It's not just us that get along very well together, but I think the whole company does. At the same time, it's a culture of a sports team, so we want to perform. We moved into new offices in Portland, in Zurich, which helps to build a new level of culture, to bring everyone together. And yeah, we are very happy that despite the fact that we have added 600 people in the last 12 months, that culture maintains. So that also shows that really people who join understand the culture, and they hire people that understand the culture and want to be part of that.
Well, someone who was an early believer in joining is Roger Federer. We're smack in the middle of the U.S. Open here. He's, of course, not at the U.S. Open, trying to get back to doing his thing and being the champion that he is. What are your plans with Roger Federer, I guess, post-retirement or whatever he decides to do?
Yeah, I mean, we're building with Roger a franchise. I think Roger already does and will have cultural impact beyond his sport. So in the end, it's about building the brand together with him in a very, very authentic way. He spends a lot of time in our office working on product. And, you know, we're looking forward to seeing him playing again. But at the same time, we appreciate when he spends time on product together with us.
So he didn't tell you that he's retiring?
I mean, we talk a lot about a lot of things, but we all hope to see him very soon on court.
Do you plan to work with other sports stars? Is that in your thinking or in your growth plan?
Yeah, we work with quite a lot of athletes now as well. I mean, we signed Helen Obiri, for example, one of the strongest marathon runners currently out there. So she will also run New York Marathon. We're working on building the On Athletics Club, OAC, where you see a lot of stories with big successes in the World Champs and the European Champs. And then, we're going to the U.S. Open tonight. Tennis is a focus of ours with the products, with the Roger line. And that's definitely a growth area that we're looking at.
Well, enjoy. Get the honeydews. It is a good drink. So I encourage you to try both of that. We have Marc Maurer and Martin Hoffmann, co-CEOs of On. Good to see you guys in person.
Thank you so much, Brian. Thanks for having us.